Hello day traders, my name is Pete Stolzers and I'd like to introduce you to the 1Option system. We've boiled day trading down into three very basic steps. First, you need to determine the market size that you're going to be trading in any particular day. When you're looking at the market size, you need to determine if the market is in a trend. So in this particular chart, this is the SPY, the S&P 500 Depository Receipt. You can see that the market is clearly not in a trend. This is a daily chart. We're in a very, very tight, choppy compression. That means that most daily ranges are also very compressed. You don't have the market tailwind or the momentum that we're looking for, so you have to be more passive and you have to reduce your size and you have to be more passive in your profit taking. Now, here we get a really nice breakout of the compression. The market comes back and retests that breakout. Once it does so successfully, we have a better breakout here, and now we're in a really nice, strong trend. Well, this is where you can spread your wings. The daily ranges are going to be expanded, and you know that pretty much any pullback that you get intraday is going to be a good entry point for long positions. Instead of having really tight target profits, now you can let the stock run and wait for signs of exhaustion. Once the momentum has exhausted itself, take profits and then wait to see if the stock's got another move. As the market gets up to the top of its range here, you can see we have a breakout, another pullback and retest, but again we're in this tight compression, so we need to be very careful because the daily ranges have contracted. Another consideration is market volume. So during this tight compression, you can see that we had some periods here where the trading activity intraday had fallen off. Very light volume. Well, this would also be a reason to reduce your size. Probably one of the biggest mistakes that I see novice traders make is that they continue to use the same size day in and day out. You need to look at this almost like a professional blackjack player, someone who counts cards. They keep their bets very small until the probability favors them, and then they increase their size. Well, it's the same way with the market. Everything we do starts with the market. And my members will hear me constantly say, market first, market first, market first. So volume is very, very important. And on days when we have a Fed meeting, you should keep your trading very, very small because we know that we're going to be dead till the Fed. Before holidays, after holidays, we also know that the trading volume is going to be very light. The ranges are going to be very light. These are days when you want to make sure that you're reducing your activity and you're reducing your size per trade. So in the chat room, you'll see position size today. So I have an algorithm that goes in and it calculates what the overall market conditions are like. If we're in a 5-day trading range and if we've broken out to a new 10-day high, what the volume has been so far during the trading day, is the market still in its first hour range? Has it broken out or broken down below that first hour range? How long has it been since we've made a new 10-day high? I mean, all of these variables are factored into the position size. When we have very, very good conditions, you'll see a number around 100%, and that's when you know you can spread your wings and trade up. Other days, you might only see a 50 or 60% reading. That's a sign that you really need to pull back. You need to be very cautious and very patient during those trading days. Every trading day starts at 25%. And through the course of the first hour, all these metrics are evaluated and the market has to earn its stripes. So you will see this climb throughout the course of the morning, but by about 60 minutes after the open, the rating starts to stabilize and we have all the information we need to know if we're going to have good trading conditions or not. So make sure to keep an eye on your position sizing on a daily basis. Finally, as it pertains to size, what's the daily range? What's happening with the overall market? So in this particular instance, this is a 5-minute chart. It's a chart of the entire day for the SPY. And here you can see how the market opens up. There's the first hour range highlighted in blue. And on this particular day, the market did break below that first hour range. That's a good sign for trading because we know that we're going to have some opportunities to try the short side. So as soon as the market falls below that first hour low, then we know we should favor the short side. And there we get a really nice range. It's a $1 SPY range, which is 10 points on the S&P 500. It's not fantastic, but it's not bad. And so the market comes down, then we've got a little bit of a support line. Here we can start contemplating some long positions, and we've got nice price movement in this particular day. Now here's another day where we have the first hour high and the first hour low. The market's trapped, and we've got a very, very narrow trading range here. It might be 4 or 5 S&P points the whole day. And all we have is this nervous chop back and forth. So that's going to be reflected in our position size reading, and we know that we're going to be trading smaller size on these days. So these are the factors that you need to consider before you even start trading. What size am I going to be trading? The next crucial element is, what's the market rating? What does the market look like currently? The starting point would be to read my market comments before the market opens each day. I post them in Option Chat, and Option Chat is also available to my day chat members. So 30 minutes before the open, you can go in and read my market comments. You don't have to scour all the news wires. Let me do that work for you. I'll tell you the pertinent information, and I will also tell you what my forecast is for that particular day, the price action that I foresee, and I'll also tell you what the directional bias is, and I'll also tell you what the key support and resistance levels are. So my market comments are really your roadmap for the day. I will keep you on the right side of the action. Now I do also have a market rating that I post in the chat room. It's 50% based on technical readings and 50% based on proprietary indicators. So the technical would be more price action related, but my proprietary indicators measure the overall internals. And sometimes there will be a divergence. I'll cover that in just a moment. So a reading of plus 30 would be very, very bullish, and it would tell you that you really want to get behind that market move. A reading of minus 30 would be very bearish, telling you that you want to favor the short side. So follow the actions that are posted in the chat room. Those actions change based on the market rating. Finally, watch for divergences. So let's say that the market is going down, 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 but the market rating is starting to level off and it's actually starting to improve. That would be a sign that market conditions are about to reverse. This is my option chat, and here you can see the daily market comments that I've posted. They are extensive. So I cover all the information that you need to do, and I tell you how the market's going to react to it. In the day chat room, you'll also see the market rating. And so minus 46 is the most extreme bearish reading we could ever get, plus 46 the most positive. But anything under 30 or over 30 I would consider to be very significant. And here you can see what the rating was over the past 30 minutes, 20 minutes, and 10 minutes and how it's been changing. And then there you've got your actions, and it tells you what you should currently be doing. In this particular case, we had a very quiet market, so we were trading small size, and we also had flat conditions, so this was saying be pretty neutral, stay flat right now. We don't really have much to go on. And so this would be an example. It's a 5-minute chart of the SPY. And you can see how the market was really moving higher, and we had extremely bullish market ratings, which told us we want to favor the long side. We want to be aggressive in here. The market's moving higher. We have that tailwind that we're going to be looking for. We had a big gap up on the open, and where normally we might be a little bit more passive with our targets, now we can let the stock continue to run because we have the potential for this tailwind to just fuel the rally. Now the market starts to level off a little bit, but then it actually breaks out to another new high. Now in this particular instance, the market rating was weak on this rally. We started to see the market rally, or the market rating fall off. It actually went into negative territory as the market itself was making a new relative high. So the price action component of the market rating was very positive at this point, but the internals were very weak, and the internals were dragging that rating down, and it was a cautionary sign for us, definitely a sign to take profits. And so we can see how the market started to leak oil later in the day. So that was an excellent exit point. And then the next day we actually had a pretty substantial market decline right on the open. So this market rating was starting to warn us that conditions were changing. Now a lot of my members ask me, can I trade that market rating? Can I trade S&P futures based on that market rating? I would say yes. In particular, you want to be watching for those divergences. When you have those, the probability of success is very high. So in this particular instance, where you see the market moving to a new high and you get that negative market rating, you would be looking for a shorting opportunity. And so I would start drawing, this is the high of the day, prior high of the day, and that used to be a resistance line. Now it's a support line. So as you start dropping below that, you want to start shorting the futures. So certainly that would have worked out to be a good trade. We see it all the time. When we get those divergences, we note that in the chat room, and members are constantly pointing that out to each other. So we've talked about how to size your positions and prepare yourself for the day. We've talked about the market rating, which will tell you which side of the market you want to be on. The final thing is we need to drill down and we need to find the best stocks. Well, I have a stock rating system for day trades. And from a bullish standpoint, we're going to be looking for a rating greater than 30. Now, if you hear us talk about SR, that stands for stock rating. If you hear us talk about MR, that means market rating. So we're looking for a rating greater than 30. We want nice, orderly price action. So we don't want a lot of chop. We don't want a lot of green bars mixed in with a lot of red bars. If we are looking for bullish trades, we want nice, tight, little green candles, one after the other, which, by the way, if we start to get these formations, the stock rating system I've developed, when it maintains a certain level, that 30 rating, for every minute that it maintains that rating, and it's hard for the stock to do that, there is a bonus point awarded, one for each minute. So you will see these ratings get up to 45, 50, 60. When you see that, you know that you've got a super strong stock. So I'm also asked, well, Pete, how do I know when to stop myself out of a position? I'm always getting stopped out too early. I don't let my trades run long enough, or I didn't have my stop tight enough, and I lost too much money. Very easy. Once you see these very high stock ratings, greater than 30, that stock is going to have some momentum, and that means that it's trading above its 10-period EMA. So if you're using a 5-minute bar chart, you're going to use that EMA 10 to tell you when to get out. And we're looking for breakouts, reversals, and compressions in conjunction with that very strong stock rating. So let me go to the next slide. All of my Day chat subscribers have access to my trading platform. It has a real-time interface with interactive brokers and Tradier. And I should mention that as of this recording, Tradier will even pay for everything I offer if you do more than one round turn per day. That means you buy a stock and you sell a stock on average every day. They'll pay for everything I offer, and you'll have the real-time data interface. So this is part of my trading platform. I just took a screenshot from this particular portion. I've got a ton of great searches. One that we really like to use is Bull Run. It is going to show us the stock rating 30 minutes ago, 20 minutes ago, 10 minutes ago. So you can see Hess in this particular example has an improving stock rating, and it's currently at 56, so we know it's been accumulating bonus points. These candidates are all right at the top of this list. Now this list is also shown in the chat room itself. So you don't have to have the platform, but if you're a day trader, you really should have my platform with real-time quotes. It's unbelievable. It's got so many great tools in it. So these stocks will be coming up, and you're simply looking for stocks where the stock rating has improved. So you had a -4 here, and you can see how it's been steadily climbing on APC. That means that this would be a really good stock to buy, especially if the price movement hasn't quite taken off yet. So in this particular instance, we'll take a look at FSLR, and you can see here how the stock was in a compression, pretty tight range. We had the stock rating greater than 30 right here, so it's starting to come up on our searches. Well, if I'm a day trader and I'm bringing the chart up, I look at it and I go, oh, you can do this in the platform. You just look at this horizontal resistance line. You'd come in, you'd drop an alert right there, and the next thing you know, about 20 minutes later, boom, you've got a pop-up on the platform that goes, hey, I just broke out to a new high of the day. What an excellent entry point. And now the stock is starting to take off, and you see the stock rating going above 40. And this type of game plan is so easy to execute too, because now that you've bought that breakout, after a few minutes, the stock should also already be running higher. So what you'd want to do is you could just place your stop right at your entry point. Well, now you have really unlimited potential to that trade and zero risk because you're putting your stop at your initial entry price. I'd mentioned earlier using a 10 EMA to exit the trade. Well, at this juncture, that stock is well above that 10 EMA, so it's just going to ride the stock all the way up. And in fact, you wouldn't have been stopped out on this trade. You would have simply gotten out because of the closing bell. Here's another example, VEEV. It's starting coming up on the bull run list immediately out of the open. There's your new high of the day, really, really strong stock rating, easy to get in here. Now in here you start running into that 10 EMA, and so you'd be taken out of the position. But as soon as you're taken out of the position, what I like to do, especially when I have a really good runner like this. Now when I talked about nice, tight trading patterns, folks, this is what I'm talking about. There's no herky-jerky, up, down, up, down, up. No, boom, 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 boom. When you see a pattern like this, there's a very, very good chance that this stock is going to continue to move higher throughout the course of the day. Nice, persistent buying. And if I recall properly, this was even happening on a neutral to lower market. So this stock had unbelievable relative strength. It also had excellent volume. You can see the volume spike in here. These are all characteristics of a strong stock. So the stock rallies, I get stopped out on my 10 EMA, made a really nice profit on it. Well, once I'm stopped out, what I like to do is I like to take and drop an alert at the high of the day. So when that high of the day is breached, I can take a look at VEEV again and decide if I want to take the trade again. So if I had gotten in on the trade here on that breakout, I probably would have been stopped out here on a 10 EMA, but that's okay because I'll draw my line again at the high of the day and I wouldn't have lost much money. So I'm in here, I'm out here, probably would have scratched on that trade. But then we get another breakout late in the day. We have big volume. The SR is super strong at this point. That's another nice move. So if you get shaken out of the position on your EMA, that's a really nice prudent stop to use. Draw your line, your alert, and then you're back in on the trade. And that right there is probably another 40 cents to that move. And here I overlaid the 10 EMA, and yes, you would have been out at that level. So you got a new high of the day right in here. You're in somewhere around 45, 45, let's say. You're out here for about a 45-cent profit, and you get shaken out here for pretty much a scratch, and then you pick up really nice, maybe 30 cents on the close in here. So you can see how this is a very easy stop system to use. In this particular chart, I wanted to show you a little bit of divergence on the SR, and I wanted to actually show you the stock rating. We can overlay it for every stock that we have. I also included my 1.0 squeeze. This shows us when we're in a compression. If we have a green dot, it shows that we have a big breakout from that compression. A red dot would be a big breakdown from that compression. So General Dynamics is a stock that really didn't do much early in the day. You know, we could see that it had early stock rating that was good, and then it kind of flatlines. So here we want to just put our alert up, and if it breaks out of that high of the day, we'd be interested in it. Well, all of a sudden you get a compression breakout, so you get that green dot here. You've had an improving SR, so it starts to show up on our scans right in here. And so when you click the chart, you simply look back and you go, hey, it was in a compression, I've got a green dot, making a new high of the day, nice entry point. A few minutes after I'm in, the stock has already made money for me, place my stop here, so I have no downside to this trade, and now I can use my my 10 EMA to ride this trade higher. And you probably wouldn't even get stopped out until maybe somewhere in this area. Now I want to point something out at the very top here. You can see how the price has continued to rally. However, you can see that the stock rating is starting to falter. So this is the rating is very dynamic, and it is constantly measuring the internals of the stock in addition to the price movement. Much like the market rating, it is not going to wait for that top, it's going to anticipate that top. So when you see this divergence, it's time to take profits and get out. So if you simply use that the 10 EMA, would have worked fine, or you can simply wait for this divergence and for that stock rating to start to decline. That's your sign that you need to start getting out of this position. And then here's another example where the stock has been very, very strong and it's continued to move up. You start seeing a strong stock rating in here in the platform on that bull run search that I was mentioning. And it's pretty easy because you draw that line and go, well, this stock's breaking out to a new high of the day. That's great. I've got big volume. I have my green dot here, which shows me that it's just released out of this compression. And these compressions are like a coiled spring. They compress that stock, and finally, when the price releases, you get a nice sustained move. And here you can see how that EMA 10 keeps you in the trade. So you've got 57.15. You got about a 35-cent winner there. Very, very nice trade. I don't want you to think that we only have bullish trades. We've got a lot of great bearish trades that we do as well. And in this particular case, you can see STT very weak on the open. lots of consecutive red candles. So this is going to be earning bonus points right out of the open. It's going to be very high on my bear run list. A great short. You can see how that market rating is just falling right out of the open here. And you've got lots of red dots, which means that it just continually to break down throughout the course of the morning. You get a brief compression in here. We like compressions. And then we get the red dots again, which tell us that this is a great shorting opportunity. New low of the day. You're in here, you're short. You place your buy stop right here at your entry price, so you can't lose money on this trade. And now the stock goes down, and you get into another compression. So the 10 EMA will probably be getting you out in this area here, but you've made a nice profit in the trade. And then now on that low of the day, once you've been shaken out on that 10 EMA, just draw a line across the low of the day. You know this stock's got really nice selling pressure, so maybe it'll take out that low later in the day. And then towards the close, you get another pop-up alert that says, hey, STT, take another look at me. I'm making a new low of the day. And you've got a nice little 30-cent winner in here if you get out when the stock rating starts to improve. So that's how we use the stock rating to find trades. And I just want to reemphasize the position size and how important that is, the market rating. So your steps before you even start trading during the day, check the position size. And let's say that I'm allocating on a normal basis. Let's say I'm using $10,000 per trade. Well, if I see a 60%, I should reduce that to $6,000 per trade. Come in, check my market rating. Okay, we're flat right now. I'm going to be waiting for a move higher or lower so that I know if I should be focusing on longs or shorts. So very easy to get this information. And then the best stocks, the ones with the highest current stock rating, the top 15, are going to be shown right in the chat room. So this is what you should be focusing on. And then you can see the entry times here as well. If you click on the symbol, it'll pop up a real-time chart and it'll overlay over the chat room. Click it again and it'll disappear and you can move on to the next symbol. Now, this is certainly something that you can use in this fashion, but as day traders, I really suggest having my real-time platform. It's much, much better. And finally, go into the platform and start looking for those really high stock ratings. And in particular, we want to see ones that are starting to move higher. These are going to be ones that already have made a nice move and are well above that 10 EMA. And so these are super strong. You can get on board and use that 10 EMA right away if you'd like. So just to recap, 3 easy steps. Market size. Conditions determine size. So if we're in a flat market and a range-bound market, no trend, we need to keep our size small. And you'll see that position size posted in day chat. Market rating. Is the market currently bullish or bearish? Which side should we be favoring? If it's bearish, we go with the bear run searches. If it's bullish, we go with bull run. So again, this is all posted in the chat room. And finally, the stock rating. So now that we know the size and what the market's doing, we focus in on the stocks themselves. So we use those lists. Those are also posted in the chat room. It's really pretty easy. And as far as the stops, because these stocks have the momentum that you're looking for, they're trading above that 10 EMA for bullish stocks, use that as your stop. If you are trading a breakout and the stock should move on those breakouts almost instantly, well, you're going to have an instant cushion. Put your stop in right at that entry price, and then for your profit taking, use that 10 EMA. I think you're going to find this to be a very, very easy way to day trade. So thank you for listening to this tutorial. If you haven't taken the 1-week free trial, I highly suggest that you do it. You'll have access to everything I offer during the 1-week free trial. I don't ask for any credit card information. I just want a valid email address. And while you are in the day trading chat room, click Pete and privately chat with me. In fact, you can privately chat with any member that's in the day chat room. Ask them if they're making money. Ask them how they like what we do. I am continually adding new tools, and we've got a very successful group. I hope you join us. Thank you.